Hey everyone, welcome back to my YouTube channel. For those of you that don't know, my name is Miguel, and I'm actually forgetting something. 1 second. Forgot the Crocs. Alright, now that I got the Crocs on, let's get into today's video. Today I'm going to be going over how to invest as a complete beginner into the stock market. When breaking this video down, I've split it up into 4 steps. When going over these 4 steps, I hope you get a better understanding of why you should invest into the stock market, and I hope it gives you a better idea of how a normal guy like myself, how a normal person like me or you can invest into the stock market and reap the rewards of it. You don't have to be rich to invest into the stock market, you just gotta be smart and do a little bit of research. So the first step in this process is understanding your why. Why do you want to invest in the stock market? Why do you want to save your money? For me personally, a reason why I want to invest into the stock market instead of just leaving my money in a savings account is inflation and the return that you get on your money. On average, a traditional savings account, like a Chase savings account, is less than 1%. So if you put $1,000 in, you're going to get $1 back. But because of inflation, it's really about negative $19 in the long term. Versus putting your money in something like the S&P 500, which is a very broad ETF that has about 100 different stocks in it, so it's very, very safe. And on average, the S&P 500 is about 7% return while also getting dividends back. And for those of you that don't know what dividends are, all that dividends are the company paying its shareholders is profit. Basically, it's just passive income. I think understanding your why and keeping the why in the back of your head really helps you later on down the road when you're investing, and sometimes the market goes down and you get scared and you want to pull your money out. That why, personally for me, wanting to retire early and be financially independent is the reason why I don't get scared when the stock market goes down. So I'm able to hold on tight, reinvest, and dollar cost average my way back in. Dollar cost averaging your way in basically is when you buy at a high price and it goes low. I look at it as the stock being on sale. So I buy the stock low, and then it brings my average cost all the way down or somewhere in the middle. So that way when the stock goes back up, I'm in the green. Understanding my why and keeping the why in the back of my head every single time I'm investing and every single time that I'm negative or that I'm positive encourages me to continue to invest and continue to grow my portfolio. Now, for your why, you don't have to want to achieve financial independence at an early age. You can just be investing simply for the benefits of not leaving it in a standard savings account. I am personally a safe dividend investor because I want to reap the long-term rewards of dividend investing. You yourself can look into options trading, you can do other things like that, but I personally am a safe dividend investor. I feel comfortable with this. It took me a long time to build my portfolio, and I want to gain $100,000 in my portfolio in about 5 to 6 years. Now that you understand your why, let's go into step 2. Now step 2, people can get really confused and discouraged at this point, but it's choosing your own brokerage. There's so many different brokerages out there. There's M1 Finance, Fidelity, there's Ameritrade, there's Robinhood. Personally, I use Robinhood because I think it's the easiest to use. It's the most user-friendly. It's free, there's no annual fees. And because I'm not doing any day trading or anything like that, it's very simple to use and it's not complicated at all. I've tried using Webull and M1 Finance, and personally, I just keep going back to Robinhood. If you had anyone at a Robinhood account that doesn't know anything about stocks, they could probably get the hang of it in a couple of minutes or an hour or so. You should definitely do your own research and decide which brokerage is right for you. But I personally use Robinhood. I'm going to be leaving a link to get a free stock in the description. You can either use mine or you can go in with a friend and use your own link. Either way, you're going to get a free stock and your friend's going to get a free stock, or I'll get a free stock and you'll get a free stock. It's a win-win situation, and it's also free money that you don't want to pass up. After you've done some research and you choose which brokerage is best for you, the next thing you want to do is step 3, which is pick stocks. When it comes to picking stocks, I don't want you to overthink it at all. It's not as hard as it seems. All that you really want to keep in mind is a dividend payout, and even then, it's nothing crazy. Personally, when I first started investing, I invested in ETFs. The ETF that I first ever invested into was SPHD. I'm just going to go ahead and show you that stock really quick so you can kind of understand what I'm saying. So currently SPHD is at $38.75. The current dividend yield is 4.74%. And all that dividend yield means is that's the percentage that you're going to get back per share that you own. So if we go up to the next payment that I'm going to get from SPHD, I own 13 shares, 13.03 shares. They're paying out 14 cents essentially for every single share. It comes out to $1.95. And SPHD pays monthly. Every single stock pays differently. But I just don't want you to overthink it. It's very, very simple. I'd recommend starting with ETFs first and then making your way into individual companies. Picking stocks is not as scary as it seems, and I think a lot of people get discouraged. I just want to encourage you because if something like me has figured it out, I believe you can figure it out too. Okay, so now that you understand your why, now that you've done some research and you picked which brokerage is right for you, and now that you kind of know what stocks to look for, we do the fourth and final part, which is kind of most important. It's reinvesting. Now when it comes to reinvesting, personally, I started off with doing about $50 a month, and then I went to $100, and then now I'm around $200 to $300 a month, depending on what I'm able to save throughout the month. I don't want you to overthink this part at all. If you use Robinhood, there's reinvesting tools that you can use. Every single time someone asks me for stock advice, or every single time someone asks me what I should be investing in, or how should I reinvest and all this stuff, all I say is, time in the market beats timing the market. The sooner you start, the faster your money is going to work for you. That's the most important part about investing. The goal of this is to create this snowball effect. The more dividends that we get and we reinvest back into our portfolio, the bigger our portfolio is going to get. As soon as you put your money in, you're going to start getting dividends for leaving your money in those certain stocks. So just get your money in. I know this wasn't a long video at all, but I just wanted to create a little simple roadmap for new investors. Personally, this is what I did, but you can do it however you want. I just wanted to show you that I'm a normal guy and that you can do it as well. If you have any comments or suggestions or questions, leave it in the comment section down below. Don't forget to like and subscribe so you don't miss a video. I'm going to be sharing my journey and how I'm trying to get to $100,000 in my portfolio. I appreciate all the love and support that you guys give me, and I'll see you all in the next one. Peace.